Hello, IGTV and YouTube. I am back on this Monday with another weekly market update and kind of happy to tell you that not a lot has changed in the last week, in the sense that I don't have anything really crazy to report. So that's a good thing considering the direction things have been going, but I do have a couple updates that will help you understand the health of the market and what's going on. So June, we actually beat a record, and this record is the amount of sales volume or sales dollars in a month. So before June of this year, we had a record from last June in 2019, and the amount of sales was about 4 billion in that month, and that is the total number of sold homes, the value of all of those put together. So that was last June. This June, in the middle of a pandemic, we actually beat that record by a slight bit. So 4.1 billion is about the sales volume and number that we sold this June. So interesting that we set a new record in the middle of a pandemic, but I've talked about this a few times now. I think there's a lot of pent-up demand from folks that wanted to buy homes in the springtime, and all of that was suppressed because of our stay-at-home orders, and so we have a lot of that going on now. So interesting to break a record. Also, I wanted to talk a little bit about affordability because I continue to talk about how prices continue to rise, right? And that's a very scary thing to hear because we worry that it won't be affordable for people, and thus we end up with a crash or something like that. But affordability is measured as normal between 60% and 75% being able to, of the people being able to afford homes, right? So right now we're sitting at 63%. The national average is 60%. So we are in that safe zone, and we're actually a little bit higher than the national average, which is a good thing. If affordability starts to drop, that is an indication of some issues that we might have in the market. But right now we're sitting in a good place. So at 63%, a little bit higher than the rest of the country. And if we did see that start to drop, it's kind of a red flag, but you would assume that if that affordability percentage starts to drop, our demand will also drop with that, right? And then kind of create more of a market correction. So we'll keep an eye on that number, but it has been around 63% for a while now. So our affordability is still good, even though these prices continue to rise. The last thing that I wanted to talk about is just some numbers in terms of closings that we've had lately. We've had 28% of closings close over the asking price. Crazy, but we are continuing to see multiple offers on homes and some bidding wars and things like that. So at our last check from last month, we've had 28% of closings close over the asking price. Also, in terms of appreciation, our appreciation rate for homes between the $300,000 to $350,000 range is sitting at about 8.9 or 9% appreciation. So that is kind of the silver lining and the good news in all of this is if you're looking to buy a home, yes, it's competitive. Yes, the prices are high, but this appreciation rate that you're getting is excellent. So, I mean, if you buy a home today, by next week, you're going to have some equity. So that's the good thing. Appreciation is definitely a positive factor in all of this, even though as a buyer, you might face a lot of competition and those prices may seem high. It continues to appreciate. So by the end of the year, who knows how much equity you would have if things continue the way that they're going. So that's all I've got for updates this week. Like I said, not much has changed, but at least it gives you a little bit of a beat on the health of the market. If you have questions, reach out to me anytime, and I'll see you guys next week.